Hi, I'm Eric Zaunscherb. I'm the chair and CEO of GR Silver Mining, ticker GRSL on the TSX Venture. And we are focused on the Plomosas silver project in Sinaloa, Mexico, having recently delivered on our promise of an updated resource estimate.
Eric, thank you very much for the introduction. Good to speak to you. Let's go back to that resource that you've just put out. You've kind of increased your the resources. You've got 15 million tonnes in the indicated category. You've got another 9 million tonnes in the inferred category. Can you kind of tell me where you've got to now in your thinking towards what happens next on the resource base of this project?
Indeed. As I said, we made a big promise last year that we would deliver this resource update by the end of March. And so more recently, we put out a news release that outlines our vision for the remainder of 2023. And it's largely about continuing to deliver ounces. This project is a combination of three previous projects into one, and on a consolidated basis in the core, we have 432 square kilometers and roughly 45 kilometers of strike length of three major structures, deep-seated structures. So a lot of potential. And really, we've only been focusing on about 6 kilometers of one of those structures. And that is where the former Plomosas mine lives, and then 6 kilometers to the south, the San Marcial deposit. So it's all about extending that. We recently published the 43-101 report that goes with our resource estimate. And in that, the recommended program, subject to board approval, is roughly 2,500 meters of infill drilling at depth in the Plomosas mine, 5,000 meters of infill drilling on the San Marcial deposit, and 5,000 meters extending to the southeast from that San Marcial deposit. And I can go into with geology in greater detail if you like, but that to me is really the crux, no pun intended, of the future for the Plomosas project, is extending along that southeast target contact. And we actually have one drill turning right now that hopefully will be generating some news flow over the next few weeks.
Thank you. I'll accept any old pun. We love a good pun down this end. In terms of the geology, from what I can see, you've got often in Mexico, one is dealing with kind of mesothermal vein sets which have got good depth and strike continuities, but relatively narrow systems. But here you're in a kind of an epithermal system which has got some different geometries to it, and it affords, in some places, wider and thicker zones.
Exactly.
Is this very much the kind of the model that you'll be continuing to chase?
Yeah, the geological model has actually been fine-tuned and tweaked, and I'd say that Marcio Fonseca, our president, founder, and COO, and his geological team have done a superb job of peeling the geological onion, and I've used that one before. But the idea is that we see this beautiful hydrothermal breccia that is the first event, if you will, of this thick body that is generally polymetallic, but then one has cross-cutting structures that enhance the precious metal content. So they're tapping fluid flow and metal supply, likely from intrusives at depth, and it's going to be fascinating as we follow the zonation from that epithermal mineralization in these younger structures that have enhanced the grade throughout. But you mentioned the width. That is a key distinction with this project. Whereas other projects you might see sort of 1 or 2 or 3 meter widths in some of these epithermal veins, we're seeing an average width of the mineralized domain at Plomosas is 20 meters, and at San Marcial 22 meters, and in the new Southeast Discovery, 52 meters. So these are large widths of mineralization that may be amenable to bulk mining. And if you look at the previous Plomosas mine, that Plomosas mine was mined to a large extent by room and pillar underground. So you have much lower costs associated with that style of mining versus selective mining, shrinkage or cut and fill.
Does it, I mean, you've just mentioned kind of underground mining, but is it clear in your mind that this is an underground development, or is there open pit potential as well?
There is indeed open pit potential. In fact, I believe for the total amount, the number of ounces of the silver ounces is about 78% is potentially amenable to open pit mining. Now, Plomosas already has 7.4 kilometers of underground development, so you have an advantage in terms of timelines and risks and capex upfront costs at Plomosas. That one would be dominantly underground. But at San Marcial, perched on the side of the hill, there's definitely some advantages to having open pit mining in that sort of a setup.
It's obviously it's easier to get started on open pit, although if you've got underground development, it may also be not so difficult to start underground. But getting a few years of large tonnages through an open pit can certainly help. What I was going to ask you about with the in your inferred resource, you've got a grade of 78 grams per ton silver, and in your indicated resource, you've got 117. So it's 40 grams richer in the indicated category. But when I look at the silver equivalent grade, they're very similar, 179 to 171. Is that because in the areas of your inferred resource seems to be a higher gold content, or what is the contributing? Please explain and unpack that a little bit for me.
Sure. In general, when I was an analyst and spent 34 years as an analyst, I always looked for an indicated grade higher than an inferred grade, which in general implied to me that as one tightens the drill spacing, improves the resolution, you're capturing more of the deposit, and statistically you're going to get a higher grade. So I was always looking for that differentiator. In this particular case, you have an additional factor, and as I mentioned, you've got the hydrothermal breccia. This is large, thick body that's polymetallic, but cross-cutting high-grade structures. So as you tighten the drill spacing, you're capturing more of those high-grade precious metal structures, and that's what boosts the grade as you tighten the resolution. In addition, when we're talking about a wide spacing on that hydrothermal breccia, you've got more of the lead and zinc that you're picking up, and that's why your silver equivalent grade is relatively the same. It's on the precious metals that you boost the grade.
And thank you. And is there a contributing gold factor to when you talk about precious metals? You're not just talking about silver. So is the gold-silver ratio more or less consistent across the area?
If you look at it right now, as you mentioned, we're talking about, say, on the indicated side, 117 grams per ton silver and 0.18 gold overall. But at Plomosas, when we saw mining there from 1986 to 2001, the average silver grade was 170 grams. So you're looking at a jump from 117 to 170. The average gold grade recovered was 0.96 grams per ton gold versus 0.18 in the current resource. So there's a huge factor that, again, as you tighten up the drilling, you're going to get a higher grade. But also if you then take it to the next step and actually mine it, you're picking up these cross-cutting structures and you're getting that higher precious metal grade, both in silver and in gold. When we were drilling at San Marcial, for example, we actually started to drill into roughly 1 meter widths of as much as 31 grams gold, and in one case over 200 grams per ton gold over a meter.
So it's good that you've got that historic, those bulk samples, really, those kind of representative samples from decades of work.
Exactly. If this were a greenfield project, you would be looking at those high grades and just immediately dismissing it as being an aberration, and you wouldn't be able to use that as you were studying this project. But because we have the history of mining and all the production records from those mines, we know what we're heading towards. That's a distinct advantage. So far, this is all good news. I've been touching on all the good things, such as the geology and the kind of the potential for open pit. Now the killer blow to go. Well, no. Yeah, exactly. Because it's not all sweetness and light out there. There's some serious headwinds, both in terms of kind of jurisdiction risk and also kind of capital markets risk, both in terms of metal price and equity responses. So let's address these challenges head on. Could you talk to me about
the changes within Mexico where that process is, but also, sorry, I've just had a huge flying insect come into my room. I hope it doesn't attack me. Changes in the proposed changes to the legislation and what the perception is versus the reality.
Right. And I think we have to recognize that these are no longer proposed changes. These are actually accepted changes to the mining legislation in Mexico. What we then see is going from the modified legislation to the actual policies and regulations. Some of those have already been published. We have to see how that plays out. But there are definitely changes. I would hate to be a greenfields company working with concession applications. There would be a lot of risk associated with that. Not to be Pollyanna about it, but we feel that we're actually in a pretty good position in that we have mining concessions that have been issued that have time on the clock. One of the proposed things is to go from 50-year concessions to 30-year concessions with some renewal periods. We have good time on the clock left for our mining concessions, which are granted. We're not in a greenfields position where we are in a brownfields position where there is historical mining. We don't have any issues with our local people. We have 3 ejidos in our local area. And those ejidos we have long-term exploitation agreements with. We have great relationships in the sense that there are no blockades or anything like that. In fact, we have a lot of employees come from our local villages, and we have a super relationship. We were able to work through COVID, for example, because of our strict COVID protocols that kept everybody safe. And that's fully appreciated. We have some really nice initiatives with the local communities in terms of education and training. And then finally, from a water perspective, environmentally, we have a lot of water in our area, and we're very protective of that. We have established ourselves as a good partner in the state of Sinaloa. So from our perspective, with our good position and with our concessions, and then some concessions on top of that we consider non-core, that are available for joint venture and option. That was your commercial. I just thought I'd slot that in there. Then we are in a good position going forward. Is there a risk as a result of sovereign changes? Yes, absolutely. At the same time, in Mexico, we're seeing pushback to this new or modified legislation from the mining states, from the governors, from the industry communities, and even internationally. I know the government of Canada has made clear to the government of Mexico that some of these changes are a bit of a problem. So there's a lot of pressure on the Mexican government going forward.
Thank you, Eric. That was a comprehensive answer.
My apologies.
If I can pull you back a bit to the just to the mining concessions. I mean, you've got this large license area, 450 odd, 432 kilometres of concession areas. How much of that is sitting in a mining concession, and how much of it is grandfathered into a kind of a system prior to the changes?
Yeah. I would estimate, and this is purely a guess on my part, but something like 75% of the area of that 430 square kilometers, 432, is mining concession. So the one mining concession is Plomosas. The other mining concession group is La Trinidad. La Trinidad was an open pit, a heap leach gold mine and a gold oxide mine that was operated, starting off with El Dorado Gold, in fact, going back into the 90s. So these are existing mining concessions. San Marcial is on an exploration concession, but that doesn't change the tenor at all. It changes your timelines as you apply to go from exploration to exploitation.
And are the tax rates and the royalty rates the kind of the key kind of economic determinants of fiscal terms? Are they prone to change, or is that kind of grandfathered into the existing agreements you've already got?
At this time, we are not aware of any changes to the concession fees that apply.
And no changes to the amount of royalty that you'll have to pay when you're in production?
Correct.
Do you feel that the market is spooked by Mexico at the moment? Do you hear that from investors when you speak to people?
Absolutely. We are facing headwinds not just of our own making, but you could say that relate to silver as a commodity. Mexico, in terms of the changes to mining legislation, have definitely spooked people. I've spoken with some institutional investors that have actually said, we will not invest in Mexico anymore at this point in time under the current mining legislation. It's as simple and as clear cut as that.
And hence the people that as kind of at arm's length as the ambassador of Canada or the delegation from Canada speaking to the Mexican government saying this is harming Canadian business as well as harming yourself.
Correct.
Yeah, it's trouble. It's the difficult thing for these politicians that they've always got a populist agenda as well. So there's managing the economics, but there's also managing the economic the politics of popularity of your voter base. It's a difficult act.
Well, I think it's a bit more than that. I mean, I respect the balancing act that they have to make. They want to protect the environment. They want to protect the people culturally, and I salute all that. But at the same time, one has to be cognizant of the fact that the capital markets that supply the funds to do these things, to the foreign investment that has to occur for these things to go forward, that is fluid. It will follow the easiest path, the path of least resistance. And as soon as a company puts up too many barriers, or perceived as having put up too many barriers, that foreign investment will go elsewhere. Yeah,
the investor dollar will go somewhere else.
Indeed.
Thank you for the kind of update on Mexico. I just wanted to ask one more question on the technical side of things. In your update a couple of weeks ago, or last week, on your kind of plan for 2023, you also mentioned that you're going to be doing some kind of first pass internal technical studies, looking at economics, trying to wrap your head around those kinds of numbers. Could you just kind of tell me a little bit more about that process, what stimulated it and what your end result is likely to be?
Sure. We don't know what the end result is until we get there, but the idea is to prepare to answer the question that we get, and that is, well, what's it worth? How can you mine? And what is the impact of having such beautiful mining widths potentially? What does that do to your economics? And so the next natural step is to do a preliminary economic assessment. At this point in time, we're not prepared to embark on that. Obviously, capital markets have to be supportive for us to go forward with some of the things that need to be done to do a preliminary economic assessment. In the meantime, there are several studies that we can do in terms of metallurgy. We have broken ore sitting there with things we can do to process that and see and confirm what the recovery rates might be, for example, in a modern context. So these are the things that we can do, and these are the things that we will do based on very cost-efficient, inexpensive technical studies.
Gradual de-risking, kind of taking a kind of a rifle shot approach to a series of technical challenges that when the time comes, you'll be able to incorporate into a waterfront economic analysis.
Indeed. I mean, we have some good sense of what the metallurgy is here. Obviously, from production records at Plomosas, we've done some preliminary metallurgical work at San Marcial, and we need to strengthen those studies to see what we can do as we move into a preliminary economic assessment mode. We're just not there yet.
Got it. Well, and that kind of takes us back to when we keep touching on it, kind of the market challenges in terms of both how do you stay funded, how do you preserve cash, how do you think about raising the next bit of development capital, the other, yeah. So I mean, let's start there. Just in terms of cash position, and you in your update, you talk about these measures you've made as a company to reduce your cash burn.
Exactly. We are very proud of the fact that we have our own rigs, and we've trained up drillers and drill helpers. We've got a fantastic geological team. We've got a beautiful camp that's well established. It was a camp that was built during the mining days and has now been restored, such that we are able to employ a good chunk of people that are local. And that's an important part of having a good relationship with the local community. But of course, there is a downside to that, and that is a monthly cash burn that one has to fund. when I joined as CEO in March of last year. Since that time, we have raised over $16 million. We have been able to continue to move forward. And very importantly is that promise to deliver a resource update by the end of March. We did what we promised. We delivered that resource by the end of March, and it was of a magnitude and grade that exceeded the published expectations on the street. Now, we haven't made any promises other than to say we will continue to drill and expand the resource base there. We were able to expand our resource base at 23 cents US per ounce silver equivalent. I think that's a rather attractive number when the metal is trading at $24 or just under $24 an ounce. We think we can continue to use our geological model to deliver more ounces to the inventory, and that's the plan going forward. That is, however, also the challenge. We are getting to that point where we need to finance again.
Yeah. So grow the envelope, add ounces. The challenge is when the market doesn't reward exploration, which was very much the case of 2022. In a sense, you could discover at a very low cost, but the market would not reward you for discovery. And in a sense, it feels a little bit like that now. I mean, for all of the progress in GR Silver, the share price is still struggling. I know it's incredibly frustrating. I've been in a similar situation myself, and you know, it's hard to know when the market is going to change. How do you cope? I mean, how do you? What's your philosophy? What's the discussion at the board? Is it we've just got to persist, and eventually the market will turn?
Well, I think the alternative is to go into hibernation, and I think the moment that the market becomes aware that you've stopped drilling, that you've stopped generating news, that your share price becomes a fraction of what it is today. So I think we have to continue to drill. We have to continue to deliver news to the market, even if the market yawns. And as it was, we delivered the resource and the stock went up by around 30%. And it's come right back down again because everyone goes, wow, that was a great result. Please send me your sub-agreement. I want to participate in your next financing. Well, maybe there isn't an immediate financing. Maybe we'll have to look at alternative means of getting cash into the treasury. Obviously, cutting back on headcount and the number of vehicles being leased and all these different things are things, and of course, executives taking a pay cut and directors not taking fees. Our directors are amazing. They have opted not to take fees in order to make sure that we can continue to drill. So one has to take these steps in order to move forward.
Well done. What about the M&A landscape in terms of, I mean, I certainly see it in the gold space. The juniors are kind of are trading at a deep discount to traditional values on a EV per ounce basis or on an NAV per ounce basis, but the mid-tiers and the larger caps are actually flourishing, and there seems to be quite a lot of kind of M&A activity at that level. Is Mexican M&A on hold until there's clarity on the government? Is that a key impediment?
It is an impediment. It is a headwind. Normally, I think at this point in time, we would be seeing more of the M&A bubbling. We are definitely talking to people. We definitely get pushback from the institutional investors that say, well, there's too many Mexican names. We want to see consolidation in the Mexican silver space. We want to see the emergence of a company that is the definitive silver investment to represent the space. But I think putting two exploration companies with projects at the same stage, that doesn't make sense. Then you have two orphans that need to be funded and fed. So my belief is that we are going to see M&A where a producer, even if it's on a small level, that has 2 or 3 years of life left but has cash flow, merges with companies like GR Silver that have 10, 12, 15 years of potential mine life ahead of them. And putting that together, that's where 1 + 1 equals something more than 2. That makes sense. And I think we will see, despite the sovereign headwind, we will see more of that coming up.
Absolutely. And I like the fact that you the rationale for not merging juniors, I see it exactly the same way. Hungry children, you mentioned 2 orphans that need feeding, which kind of brings me back down to so the ultimate driver of this is therefore the geological narrative. It's the reinterpretation that you've got. It's the new model. It's the understanding of the cross-cutting. It's the southeast extension of San Marcial with the wider zones. If you can hang a geological narrative around that gives you the upside and the kind of the opportunity to re-rate. Is that a fair assessment?
That is the key. I mean, if you look at that western edge of the Sierra Madre Occidental, there are some world-class deposits along that, world-class mining camps. You look at San Dimas, for example. You look at what Vizsla has done on their project. It's superb stuff. It's fantastic geology. And here we sit several tens of kilometers to the south of Vizsla. We have something that's slightly different. We have this overprinting of low to intermediate epithermal over these hydrothermal breccias. It's a very large project with very large potential scale. And the fact that these are very large widths on a relative basis is something that, although the market may not appreciate it at this point in time, certainly very serious parties looking at this very much do appreciate it. And so if we can continue to tread water, if we continue to drill and deliver news and demonstrate the potential of this particular geological system, I think that eventually the market will catch on. In the meantime, we sit at a significant discount.
Yeah. Well, that's the opportunity, isn't it? I mean, it's the risk and the reward. There has to be kind of an asymmetric approach for kind of investors to feel comfortable, and perhaps it'll be some stabilization of the Mexican legislative area that will kind of highlight the reward potential once the governmental risk has kind of stabilized, and then we come back into the usual matrix of geological risk, technical risk, and the other good things about being a junior exploration company.
Exactly right.
Good. Well, Eric, thank you very much for taking the time to explain all that to me. I feel as if I know the company a lot better after a very brief time talking to you. I like the upside of that area to the southeast of Marcial. Presumably, you are looking at your entire land package and realizing that you've got chips to bargain with, and so you must be handing out NDAs like confetti and trying to speak to other mining companies.
More like post-it notes rather than confetti, but yes, there is definitely interest in the non-core that we have, over 300 square kilometers of non-core concessions. We have areas of the core that are not being explored to the extent they should be. Our focus, as you mentioned, is on that target contact between the upper volcanics and the lower volcanics. That's proven to be extremely important in locating that. Also important is to follow some of these cross-cutting structures. We have a very, very attractive cross-cutting structure, a structural corridor that actually connects San Marcial and seems to go directly to La Trinidad. And so there are some very interesting historical operations, small-scale artisanal type operations that we're finding as we do detailed mapping along that structural corridor. So our current program on the surface is detailed mapping, extensive lithogeochem surveying to generate drill targets for the future. In the meantime, we're drilling along that southeast extension of the contact, and that's going to be quite exciting from at least a geological perspective. Let's hope from an economic perspective as well.
And is that going to be news flow that you're going to be delivering through the course of the year? It's kind of gradual infilling and extensional drilling with the occasional bit of metallurgical news flow thrown in there.
Indeed, the extension is the headline, right? As we potentially come up with new mineralization, whether it's of the same style or something new as we extend to the southeast. But the infill drilling is important from an economic perspective. As you can see, we increased our grade quite significantly from the previous resource estimate to the current resource estimate, and that comes through infill drilling. That is the low-hanging fruit, if you will.
Good. Well, good luck with it all, and thank you very much.
I thank you, Merlin. It's always a pleasure chatting with you.